Good morning, Advantage members. Happy Thursday. It's February 2nd, and we got markets that are moving. They're moving away from the local highs. We put in a higher high locally around 24,200. And one thing that I want to point out before I get the rest of the video started is this sort of, three sweep pattern on the way up, where markets will typically have these sort of big, pushes up into the highs, take out a bunch of short stops before they break down. I want to point this out in a larger visual dating back all the way to July and August 2022. So about, 6 to 8 months ago, right? You can see multiple times we've had, almost visible 1, 2, and 3 squeezes before the market breaks down. Again, October 1, 2, 3 squeezes before the market breaks down. The reason I feel like that this is an important pattern to pay attention to is because what it does to overall morale and traps that are being laid as the market keeps grinding up in the face of a very heavy bearish divergent environment, right? Look at that bearish divergence right there. That's pretty damn heavy. And the market has yet to break down. So with these 3 sweeps, right, what we see is here again, same thing, bearish divergence right there, 3 sweeps before the market broke down. This area, I think, is a little bit different. It's not as heavy as the bearish divergence, but nonetheless, still bearish divergence. Bearish divergence is basically, where you're making a higher high in price, right? But the RSI, which is sort of your momentum indicator, is not showing you the same kind of velocity and momentum. And so you have this case right here, triple sweep all the way here in July and August 2022, triple sweep right here in August and November 2022. And now we're getting the same in January and February 2023. I want us to be paying attention to this because the probabilities and the confidence level is extremely high, where all bulls have this supreme confidence that yesterday, when we had the Fed meeting, everybody felt great, going in and even coming out of it, right? Fed raised rates 25 basis points. Powell did not sound as hawkish, but he also did reiterate that markets are getting ahead of themselves. He also did state that they're going to, keep hiking interest rates, and inflation is still a big concern. But guess what? Markets prior to the conference were already elevated the entire month of January. So headed into the conference, you had one more sweep of the highs, and now the market is finding it hard to stay above this local high from last week. So what does that tell you? Well, it tells you that there could be a vulnerability in positioning. If the market were to slide down, guess what? The overly confident and cocky bulls who are thinking that this is going to rip faces, they may get caught and get trapped as this thing starts to unwind down. Okay. And this not only goes for BTC, but it could go for many aspects of the market too, right? You could kind of see Meta posted their earnings yesterday. Meta ripped up 20% in the overnight session, right? Post-market. Okay. If Meta comes down today 5 or 10%, that's not too bad, right? That's not too bad in context of how big of a rip this was. So the point is that as markets are extended right now, they have much more of a vulnerability of having 3, 5, 10% pullbacks, especially in crypto, 10 to 20% pullbacks, which would still put crypto, if you look at a fib retracement from the low, 16,529, all the way up to the high, 24,200, a pullback to about, from the current prices, right? About a 10% drop. That takes us back to about 382 fib, about a 11% drop. That's not too bad. That's not bad at all, in fact, right? Same thing goes for altcoins. Look at ETH. If ETH from here drops 10%, we're still only close to about $1,500 from the lows where the new year started to the high. Dropping down to 1,500 is again a 382 fib pullback. That's not that deep, and it's not a bear territory. but it does mean that the late bulls, the late longs will get shaken out. Because if you're levered up to the gills up here and you see a 10% flash pullback, that may even cascade with a big wick 15%, but it may close at a 10% pullback. So this little excess right here will definitely squeeze out a lot of longs in a liquidation phase that could cause a bit of a cascade and a panic. Now, that is one thing that you want to be paying attention to, because as I pointed out here in the advantage announcements earlier this morning, if you look for a 10 to 20% drop, okay, that could be the opportunity to get long after that. Again, you can get short now too, right? But I'm saying it is not a necessity that you have to get short, right? This doesn't mean that you have to follow the scenario all the way down to 20,000 or 18 or 15. It just means that maybe you get a 10% pullback. Maybe you only get to 22K. Maybe it goes all the way deep to 21K, right? But if you don't want to get short, you can just wait. You can just wait and see what the market shows you over the next, 24, 48 hours or the next week, and then go from there. Okay, that is the benefit and the advantage that you get in the current scenario of the market. You don't have to force positioning. You can just wait. If you wait for a pullback, you may get that 10% pullback. And then if you still believe in the long side, it's better to buy 10% down rather than now, with a risk of a 10% sell-off that may go even lower. Okay, so I want to point that out to you guys as a potential, opportunity of either waiting or shorting now as a hedge, shorting now as a quick scalp, or waiting for a pullback for a deeper long opportunity. All right. This not only applies to BTC, but as I pointed out here in the advantage announcements, there's other altcoins, AVAX, ETH, Aptos, Solana, and Atom, which in my opinion are very extended and have much better technical setups for a nice, 10 to 20% pullback if we do get that. Okay, ETH is probably the easiest one to me because it seems so damn obvious that ETH over here is unable to close above this high. It swept this high with this green candle. 10% pullback right into this pivot right here is about approximately $1,500. A deeper pullback would be around $1,350 to $1,400, which should be about an 18 to 20% pullback. All right. Same thing goes for AVAX. I think AVAX is extremely overextended. It tagged this very important multi-month level around $22, dating back all the way here in 2022 and even 2021 back here. Okay. So if you want to short here, right, and you're looking for a pullback, well, 10%, 20% pullback for AVAX is around maybe 18 bucks. Okay. So I'm presenting these situations just so you have optionality. Doesn't mean you have to take the trade. Doesn't mean anything, really. Again, it's not investment advice. I'm personally not taking a trade right now, at least not officially. If I'm taking unofficial trades, right, they're quick and they're in and out. Like I posted about the LTC long position yesterday. We got into LTC around 96 and some change, got out quickly, literally in 10 minutes, took down $1,000 profit around $99. Boom, get in, get out, that's it, right? I take these high risk scalp positions just when I see momentum. Other than that, we had a couple of spot positions in the market. Like I still have Alpha spot, which so far I'm not doing so great in, but guess what? Before that, we closed out a nice 17% profit in INJ. INJ, I pointed out multiple times, INJ is going to probably rip even higher, right? Guess where INJ is today? It went from the $2 marker that we had initially entered, and INJ is currently trading at $3.65. It went all the way up to $4. That was 100% gain, literally from the point that we pointed it out. Okay, so if I get in and out of a position, I take down quick profits like 17% here. I took down a small 8.5% loss before, 1% profit before in DOT, a 1.5% profit. Fetch, we had a 30% profit. We had a 1.2% profit in AVAX. You had a big profit in Solana, 53% profit. When I take down these profits, right, I may not be getting the exact tip top of the move. Okay, but that's okay. The game right now to me is taking down profits consistently over and over and over and compounding those gains. Okay, I'm not here to call tops or call bottoms. In fact, I think there's a higher probability that the market right now is in the midst of still creating a local bottom here, shifting back up. It will have a deeper pullback, but then from here, as long as we don't break back inside this area, inside 18 and a half, I think we could still probably go higher, probably towards 28K, maybe even as high as like, 30 or 35, 40K, right? As I pointed out before, if you look historically, right, BTC, when it had this massive sell-off in 2018, it went to a low of $3,100. And then we had this big bull market, rally or bear market rally, whatever you want to call it. We went all the way to 618 fib, all the way to 13,500 in June 2019. Guess what? If we count that same sort of scenario now, 618 fib is around $45,000. Do I think that's impossible? Definitely not. It seems unlikely right now, but crazier things have happened in crypto, right? So I just want to point out these things for you guys, just so you know, and you're aware of scenarios that may happen. So you're not blindsided by things, that occur in the market, just so you can catch these, moves. All right. So anyway, that's where I am right now with markets. I still do believe that they're a little bit extended to the upside. I think the risk right now is that the markets, break down further, catching a lot of people off guard, high levered, especially with liquidation sitting below price. I think scenarios like that should be accounted for. Either you're putting on shorts as hedges, shorts as outright shorts. I don't know, but in my opinion, you got to be careful. Okay. There are, obviously outlier assets that have been ripping, right? FTM, we had pointed out FTM weeks ago here in the altcoin analysis area. If, where is it? I've pointed out so many alts, I feel like the last couple of weeks. Let me see here. Yeah, FTM was breaking out, but this was a few days back. I think I pointed out FTM even before that. Let's see here. I just want to find this real quick. Oh, there it is. We had mentioned FTM on the 11th of January. It was trading at 25 cents. Now it's trading at 60. That's over 100% gain, right? So the point is that, these situations where I mentioned like, hey, it looks like, Andre, who was one of the main creators of FTM, is shilling FTM hard. You might want to be paying attention because he might just be really pumping his bags. And it doesn't hurt to get in that situation and, basically take advantage of that, right? So anyway, all in all, markets have overall, everywhere you look on a daily chart, FTM, Atom, Solana, Ethereum, Near Protocol, Polkadot, AVAX, they're at minimum 100% off the lows. At minimum. INJ, for example, is almost 250% or so off the lows, right? LTC, for example, is almost 100% off the lows, right? Fetch is, I think, almost 5x off the lows in December. Right? So you have massive situations where markets have moved off the lows. Now, in my opinion, is not the time to start, pressing your foot on the gas pedal to go long. It's time to probably take profit and be cautious and wait for those pullbacks. Again, I don't think this is bearish to me. At least I don't think the market needs to be seen as a bearish scenario. But in the near term, you do need to look at who is truly excited about this market and feels, too cocky. Well, it's probably the bulls. They feel like they're, invincible since the beginning of January. And usually invincibility like that, you have some punishing pullbacks. All right, that's it. Again, non-investment advice. Y'all take care. I'll keep you updated through the day. Cheers.